This voice is taken from an article with the title, How Do I Use Pivot Points for Support and Resistance Levels, which has been published on TRADERTALKSNET. Using pivot points for support and resistance levels is a popular strategy for many traders. When used correctly, pivot points can provide valuable levels of support and resistance that can be used to enter and exit trades. So, how do you say pivot points for support and resistance levels? First, you need to calculate the pivot point. This is done by taking the high, low, and close prices of the previous day and calculating the pivot point based on an average of those prices. The formula for calculating pivot points is pivot point equals high plus low plus close, 3. Once you have the pivot point, you can then calculate the support and resistance levels for the current day. The support and resistance levels are calculated by taking the pivot point and then adding or subtracting the range of the previous day. For example, if the range of the previous day was 10 points, then the support level would be the pivot point minus 10 points, and the resistance level would be the pivot point plus 10 points. You can also use the pivot point to calculate resistance and support levels for the next day. This is done by adding or subtracting the range of the previous day from the pivot point of the current day. For example, if the pivot point T of the current day was 100 and the range of the previous day was 10 points, then the resistance level for the next day would be 110 points and the support level would be 90 points. Once you have support and resistance levels calculated, you can use them to enter and exit trades. When the price of an asset moves above the resistance level, it is a signal that the trend may be reversing, and you can enter a trade. Conversely, when the price drops below the support level, it is a signal that the trend may be coming to an end, and you can exit your trade. It is important to note that pivot points are not infallible, and the levels of support and resistance can be broken. Therefore, it is important to use other indicators to confirm the signals from the pivot points and to manage your risk appropriately. It is also important to note that pivot points can be used in other ways. For example, the pivot point can be used to calculate the midpoint of a range, or it can be used to calculate the average price of an asset over a given period. In conclusion, pivot points can be a valuable tool for traders who are looking to enter and exit trades based on support and resistance levels. However, it is important to use other indicators to confirm the signals from the pivot points and to manage your risk appropriately.